Credit scores are vital in personal finance, affecting loans, rentals, and employment. These scores, derived from credit reports, help lenders evaluate risk. A high score can secure favorable loan terms, while a low score may lead to higher interest rates or denial. Landlords use credit scores to assess reliability in paying rent. A good score can simplify renting, while a poor score might necessitate higher security deposits. Employers, especially for roles requiring financial responsibility, may review credit reports, looking for issues like late payments or high debt. To build and maintain a good credit score, pay bills on time, reduce debt, and check credit reports for errors. Regular monitoring helps track changes and protect against identity theft. Understanding the impact of credit scores on loans, housing, and jobs empowers better financial decisions. By managing credit effectively, individuals can enhance their financial stability and opportunities.
Gerri, if you can kick us off, when it comes to the importance of credit, what advice do you give people just beginning to understand their credit?
Well, I think one thing that I find a lot of people find confusing about credit is this whole idea of what's my real credit score? Where do I get my credit reports? And it is a little bit overwhelming at the beginning. So the first thing I always say is you have to know what's on your credit reports. And to do that, you have to get them. So there is a federally mandated free credit report website, annualcreditreport.com. You go there and you can get your reports from Equifax, Experian, and TransUnion. Now, free credit scores are not required, but I've documented over 38 places to get your credit scores for free. So then you want to check your credit scores to see what the credit report is saying about you and the way that you pay your bills.
That's a lot of choices. So that's a good start to get our credit report for free. Lynnette, in your book, Zero Debt, you discuss the importance of understanding credit as a tool. Can you elaborate on how a deep understanding of credit can really change someone's financial trajectory?
Sure. You referenced Zero Debt, and I appreciate that. And that's the better known one because it's a New York Times bestseller. But I actually have a book called Perfect Credit, 7 Steps to a Great Credit Rating as well. And in that book, my research showed that the difference between a person with good credit, excellent credit that is, and a person with poor credit is phenomenally big. Over a lifetime, someone with excellent credit, what I call perfect credit, being in that kind of 760 to 850 credit scoring range, that person will save or earn over $1 million over his or her lifetime over the person who has poor credit. So we know that there are so many ways in which having a great credit rating works to your advantage financially. You alluded to some of this at the top in terms of better interest rates, of course, on your mortgage, lower interest rates on your credit cards, your auto loans, your student loans, but then the job aspect as well, and your housing situation. Even if you're a renter and you have a solid, stellar credit rating, more landlords and property owners would be willing to lend to you. And if you have a bad credit history, fewer will. And so you might have to pay a premium for your rent. Or in the job market, we know a lot of companies do employment-based credit screening to determine who to hire and who to promote. So that's yet another reason that you want to keep your credit in tip-top shape.
Wow, $1 million difference. That is like the difference between having a jetpack on your back versus trying to go swimming with like a cinder block tied to your waist. Yeah, right. Matt, I want to ask you, you had credit card debt in your 20s. How did that shape your understanding of credit's role in personal finance?
Oh man, it shaped everything about my growing up and my, going into adulthood. And it really shaped kind of how I view things. And I mean, I think that what it did was it really kind of forced me to learn about credit and about how to kind of do things right and how to pay really close attention to your money. It's like what they used to talk about with my grandparents and the Depression, how it changed them so much. It's what we're seeing with millennials having been scarred by the Great Recession and things like that. When you have those really difficult times, it forces you to really learn more about what mistakes you made, what things you can do better. And that's been really part of my mission in my personal finance work over the last decade plus, is to help people make smarter decisions than I did. Because the truth is, like Lynnette really quantified well, there's very little in life that is more expensive than having crummy credit. So it's important for you really early on to get started and do what you can to make it right.
At LendingTree, do you find that consumers generally understand credit scores?
Honestly, no. There's certainly more interest in it, and there's never been more information available on credit. But I really think that people generally tend to overthink credit in a lot of ways. Yes, it's complicated. Yes, there are a lot of nuances. Yes, there are a lot of little things that you can do. But generally speaking, credit comes down to three things. And it is paying your bills on time every single time, keeping your balances as low as possible, and not applying for too much credit too often. If you do those three things over and over and over for years, your credit's going to be just fine. And that stuff is obviously easier said than done, especially with as expensive as life is in 2024. But those should certainly be your goals.
Yeah, I like the way that you put it into simplified terms. Leslie, as a financial attorney, what legal misconceptions do people have about credit scores that you frequently see?
So really from the legal perspective, I can tell you that there is, and I agree with my panelists, that there is a lot of confusion among consumers about credit scoring, credit worthiness, and how that ultimately impacts their debt and financial management. It is common that what we're dealing with on my end are the legal end of things. So after somebody has been delinquent for quite some time and then they're sued, and now how is that going to impact the long and short-term values related to the credit scoring models? So, from the consumer perspective, when we're advising them on the legal end of things, that, managing that credit score well early on to avoid getting into the legal ramifications of being behind with debt is ideal, of course. That's not always possible in this world and lifetime. Life does happen, and that does get in the way of things, and that can trip you up as a consumer when it comes to dealing with the finances, and then all of a sudden the credit is managed and the credit is mismanaged. So what ends up happening on the legal end is that we try to advise clients that it is an ongoing, a lifetime process. It's really easy to tank the credit, but it's very difficult to rebuild and keep it consistent. In order to have good credit, you have to manage the debt. So if you have debt that's out of control and there are legal ramifications to that, then that's going to impact ultimately the credit. There's been changes to the credit scoring models and reporting where certain things are not reported on the credit. And from that perspective, a lot of people think that, well, if it's not on my credit report, then I'm in the clear. But legally, they're not. So just because it's not reported or falls off, that doesn't mean that a judgment isn't still enforceable or that a creditor can't still come after you under certain statute of limitations in certain jurisdictions. So from that legal end of things, we are seeing a lot, the same, again, as my panelists stated, a lot of misconception and misunderstanding on the legal end and how the legalities of debt then ultimately impact the credit piece.
In most cases, are you trying to help your client to avoid bankruptcy and putting a plan into place?
Almost everybody who comes to see me really doesn't want to even hear the word bankruptcy. They really don't want to be in a bankruptcy court and dealing with that. And almost 99% of the time, we can help somebody avoid that just by reframing and restructuring what's going on budget-wise, educating them, and helping them see ultimately the what we would call more financial freedom and the fluidity of resolving debt the right way for them. I always say, you know, when you have debt, no two are ever the same. Everybody has a specific, almost like thumbprint of debt. So even if you carry the same creditors, the impact on your credit and finances is always different. So, you know, and ultimately we discuss what somebody's short and long-term goals are. When there's bankruptcy involved from a legal perspective, there are a number of ramifications. And the one thing I do want to say that I find is the biggest misconception related to bankruptcy is that it's a right, but it's not. Many consumers say, you know, I'll just file bankruptcy. You don't have the right to file bankruptcy. You may have the option to file bankruptcy if you qualify. There are qualifying factors that have to be placed, including what's called the means test, and that does change from jurisdiction to jurisdiction depending on where you live, and state laws and federal laws. So not everybody qualifies for bankruptcy. And with many types of jobs, security-related jobs, military-related jobs, and licensing-related jobs, bankruptcy is not an option. So many are coming to us saying, hey, you know, we just do not want to even hear the word bankruptcy. What can we do to avoid that?
Anybody want to chime in? Anything else on this segment?
Yeah, I'd like to quick add that we follow up on what Leslie's saying, and that in those 10,000 questions that I've answered, a lot of people have misconceptions about credit repair. For example, you will find TikTok videos and, you know, different posts saying you legally don't have to pay your debt, right? A collection agency owns the debt, so they legally cannot force you to pay your debt. Please, please, please be careful about taking debt advice just from some random person on the internet, because it could be expensive, because Leslie can tell you that collectors sue and successfully sue consumers all the time. But the other thing I want to point out is related to credit repair. A lot of times when I talk to people about credit repair, we come to the understanding that Andy, you mentioned your daughter is becoming an ER technician, right? Is that the
EMT?
Yeah, EMT. And I think about debt triage. Sometimes people come in looking for credit repair when really what they need to do is stabilize their financial situation and their credit situation first. So they need to look at those options, like, you know, whether they can resolve their debts through debt settlement or through bankruptcy or other options, then focus on credit repair. Credit repair isn't always the immediate thing that you want to focus on first.
I would like to just pick up what you said first, Gerri, because I love that you brought this up, that it is very common for consumers to see things on social media and then come in and say to me, well, I was told I don't have to pay my debt, or it's not on my credit report, or, you know, there's so much misinformation out there. It is so important for consumers to understand that just because somebody made a video about it doesn't mean that that applies to you and your situation. The legality is that if your debt is valid, you're legally obligated to pay it. If you don't pay it, they have the right, a collection agency, a debt buyer, anybody has the right to come and sue, who owns that debt legally, to come sue you within the statute of limitations. And that statute of limitations does vary. Just because it's outside the statute of limitations just limits their ability to sue you, but that doesn't limit the ability for them to report it on your credit or continue to collection efforts. It just limits their collection efforts. So at no time should you be listening to somebody who doesn't know your situation or what's happening with your debts, tell you that you legally are not obligated to pay those debts.
Well, I'm so grateful to have this panel of experts and not be confined to 30 or 60 seconds of a TikTok video. Let's go to segment 2. We're going to talk about establishing credit.